Hi everyone, and thank you for tuning into my channel where I talk about stocks, the stock market, and investing. I post videos daily, so if this sounds like something you want to get more of, subscribe below. Alright, in today's video, I'm going to answer the question if Roku stock is a buy. You're going to get the answer before the end of the video, and I'm going to use my simplified 6-step framework for analysis. So let's get right into it. Alright, the first step in my framework is the customer value. And Roku sells low-cost players that connect TVs to Roku's platform. You can buy these anywhere from $20 to $50 for the more premium ones that come with extra features like being able to connect your headphones into the remote controller, which I find really helpful. I like that feature. That's the one I have for my house. Uh, Additionally, Roku's operating system gets built into TV with partners that manufacture TVs, so customers automatically get the Roku platform, which aggregates streaming channels into one platform. Plus, you get Roku's free ad-supported channels. Okay. Looking at its revenue, it's clear that customers perceive great value from Roku. Sales increased from 320 million in 2015 to 2.8 billion in 2021. The next step in my framework is unit economics, and recently Roku has been selling their players at a small loss so that it can make money from people connecting to its platform. This They don't always sell these players at a loss. It's in recent 4 to 5 quarters that the rising costs of input and shipping has increased the cost, and Roku's management has decided to absorb these losses rather than increase prices for consumers. Roku's able to do that and willing to do that because it makes so much money from its platform segment. It takes a percentage of revenue generated from showing advertisements to people watching content on the Roku platform. So if you're signed into the Roku platform and you're watching, I don't know, if you're watching the ad-supported version of Peacock and you get shown advertisements, Roku's going to get a percentage of that. Also, if you purchase streaming services from the Roku platform, let's say you buy Disney Plus on Roku from Roku, then Roku will get a percentage of that as well. And similarly with movie rentals. If you rent a movie and pay for it through Roku's platform, Roku will get a percentage of that. So those are high margin, very lucrative sales. And so for that reason, Roku's willing to sell those players for lower prices, for a small loss, just to get you on the platform. And that way you can start generating revenue from you for months and years at a time into the future. Roku's total addressable market is the 1 billion people on the planet with high-speed internet access. These could all potentially become customers. And looking at Roku's average revenue per user, which is above $40, this can be a significant revenue stream if Roku's able to capture even a moderate percentage of this total addressable market. The next step in my framework considers competition, and Roku's competing with similar products that are priced higher. Roku's on the lower end of pricing for these players, and that's driving customer growth. It's also one of the more, I would say, practical um, products in the market. The thing just works really well. It's reliable, and it's building customer trust in that regard. It's the #1 TV operating system in the US, so it's gaining traction as a reliable, formidable partner. Um, that said, Roku is in a fiercely competitive market where it feels the need to keep prices low on its players in order to attract customers. It does not feel confident it can sell those as much of the players as it would like to at a price that is at least break even. So it's absorbing losses to sell these units. I would have preferred from an investor's standpoint if it was at least breaking even on these units. The next step in my framework considers valuation, and Roku, looking at it from a price to earnings and price to free cash flow of 67 and 89, it's close to the cheapest you've been able to buy Roku according to these metrics in the last year. So relatively speaking, you can say that it's inexpensive. However, Roku has a very brief history of profits and free cash flow. I was only able to observe a year and a half of positive earnings and positive free cash flow. And so I don't have a long history to look back into to compare these valuation metrics. So that's a ding on its valuation. The final step in my framework considers risks, and for Roku, the primary risk are the rising costs of goods that is pressuring its player segment. I mentioned earlier it's selling these things at a loss. 5 consecutive quarters of a gross profit loss in its player segment, and those losses are rising. So that's an elevated risk for investors in Roku. And secondly, I noted recessionary fears are causing marketers to pull back advertising spending, which is a substantial source of revenue for Roku. And we don't know how long this recession or this arguable recession will last, or the decrease in marketing spending will last. This elevated uncertainty is a risk to Roku investors. Now that we've considered each step in the framework, let's see the grade that I gave Roku. For customer value, I gave it an A. Its players are selling at relatively inexpensive prices, and customers are finding it to be perceiving a good value here. Unit economics, I gave Roku a B because the platform segment is extremely profitable, very lucrative. Meanwhile, its player segment has absorbed gross profit losses for 5 consecutive quarters. On balance, I gave it a B here. Total addressable market, I gave Roku an A plus. Massive market size, 1 billion households that have internet, high-speed internet access that could all buy streaming content, and so that's a massive market. I gave it an A plus. Competition, I gave Roku a B. It feels the need to offer its products at the lowest prices possible, even absorb losses in order to gain customers, and so I gave it a B here. Risks are elevated. The rising costs of goods are pressuring its player segment, and that is persisting. It's now been 5 consecutive quarters. That's an elevated risk. I gave Roku a B here. Valuation, I also gave Roku a B because even though it's relatively inexpensive, you haven't been able to buy Roku at a cheaper price to earnings or price to free cash flow that you can buy it today. However, I did give it a sort of a downgrade because it's only been profitable for a year and a half or so, positive free cash flow only for a year and a half or so. And so I don't have that long history to look back into to compare. So I lowered the valuation grade a little bit and gave it a B here. Okay, so now that I've considered every step in the framework and given Roku a grade, it's time to find out if Roku stock is a buy. Yes, it is. Roku stock is a buy. The relatively inexpensive price to earnings and price to free cash flow combined with a massive total addressable market swayed me in favor of recommending Roku stock as a buy, even though I acknowledge that the risks are elevated, especially in its player segment and as well as advertisers reducing demand. However, I deem those to be temporary in nature, and those could resolve themselves over the next 6 to 9 quarters. And so longer term, however, Roku's got the tailwinds at its back, and so I recommend Roku stock as a buy. But let me know what you think in the comments down below. Roku is a bit of a controversial stock, so I know a lot of you are going to have different opinions on it. Let me know what you think in the comments. I'd be happy to hear your thoughts in that regard. But that's all I've got for Roku today, and tune in next time for the next installment of Is This Stock a Buy? Thank you for watching, and I'll see you next time.
I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular Stock Advisor. Stock Advisor has beat the market by more than 250%. Go to fool.com/Parkev to get your 10 stock picks now.